Was Isaac Newton the worst investor in history? We all know my boy was bright. Despite being born on Christmas Day way back in 1643, he graduated from Cambridge University aged 21 in 1664 and returned as a professor in 1668. He went on to be attacked by an apple, which led to the discovery of gravity. He invented the telescope, discovered the properties of light, created calculus, calculated the movement of stars, published Principia Mathematica, which established the laws of motion and gravitation, established the laws of cooling, and discovered Newtonian fluids. All in all, the boy had a fairly good brain. The problem was, Isaac was poor. He grew up in a poor family, with illiterate parents who were farmers, and the salary for a Cambridge professor wasn't enough to splurge on a private jet and mega yacht, which were basic necessities in the 1600s. So in 1696, aged 53, Isaac, not being a simpleton, decided to leave Cambridge for London, where he became Master of the Royal Mint. This was a prestigious position. In a time when coins were actually made of gold and silver, it was critical to ensure coins were made to a uniform standard. It was also critical to ensure counterfeit coins were quickly found and removed from circulation. A Sisyphean task at a time when an estimated 20% of all coins were thought to be counterfeit. Isaac was paid £500 per year, which is the equivalent of £82,000 or $111,000 today, for his role at the Royal Mint. And it turned out Isaac was a ruthless manager. Long before Jack Welch took over at General Electric, Isaac implemented his own form of management principles. He weeded out internal corruption, sacking and imprisoning staff who cheated the mint, and implemented efficiency measures to ensure the veracity of the national currency. At a time when counterfeiting coin was high treason, Isaac proved so successful in identifying and prosecuting these criminals that the coinage in circulation actually started to fall. This meant he was able to work the Royal Mint at full capacity to produce enough coins to keep the country operating, a bizarre early form of quantitative easing. In addition to outright counterfeiting, many cheeky people at this time would clip small amounts from the edges of silver coins, the shavings of which could be sold to silversmiths, whilst the coin retained its nominal face value. Isaac was again up to the task of redesigning the coins to prevent this type of clipping, without defacing the coin, rendering it worthless. Isaac's work resulted in the Royal Mint producing the highest number of coins on record, and as a consequence, their highest ever reported profits. Additionally, Isaac's work in standardizing the amount of gold and silver in coins helped to save the Royal Treasury £42,000 each year, equivalent to £7 million or $9 million today. As talented as Isaac was as master of the mint, he was equally adept at lining his own pockets. In addition to his annual salary, Isaac earned a fee known as perquisite, which was a commission based on the volume of coins minted, and as we just mentioned, Isaac had the Royal Mint producing coins in record amounts. This perquisite amounted to 3% of all coins produced and could have generated approximately £50,000 each year to be shared between Isaac and the other officers of the Royal Mint. An additional fee, known as seigniorage, was paid to the Crown and was based on the profit generated by the mint. That is the difference between the face value and the cost to produce the coins. Isaac and the other officers of the mint would also receive a small portion of this profit as an annual bonus. All told, after just 5 years as master of the mint, Isaac had increased his net worth from almost zero to an estimated £5,500, the equivalent of £1 million or $1.3 million today. As an intellectual, Isaac decided the best thing to do to improve his fortune further was to join the degenerate gamblers, speculating on the newly established joint stock companies at Jonathan's Coffee House in Exchange Alley, the precursor to the stock exchange we know today. The difficulty was, at this time, there were only about 10 companies whose shares were available to trade, including the East India Company, the Bank of England, the Royal Africa Company, and a few smaller offerings. Additionally, investors, or speculators, often traded convertible debt and government bonds at the coffee houses. Isaac, ever the cautious investor, as the discoverer of gravity and the idiom, "what goes up must come down," avoided the speculative frenzies of other investors, and restrained himself to investments in the Bank of England, which he knew well as master of the Royal Mint and government bonds, then known as consols, and which paid out 4% annually with minimal risk of default. By 1719, this cautious approach allowed Isaac to increase his net worth to £15,000, the equivalent of £3 million or $4 million today, an amount of money that would have allowed him to live in luxury for the rest of his life. Then came the South Sea Company. The South Sea Company was founded in 1711, during a time when Britain was struggling with massive government debt due to prolonged wars, especially the War of the Spanish Succession. It was proposed by Robert Harley, the Chancellor of the Exchequer, as a clever financial instrument to manage national debt. The idea was that the company would take on a large portion of the government's debt, and in return, it would be granted exclusive trading rights with South America. In theory, this monopoly would allow the company to earn vast riches by trading goods with the Spanish colonies. In reality, however, Britain had limited access to South American markets, as Spain still controlled most of the region and permitted only minimal British participation. The company's commercial activity remained weak, but its financial innovation gave it a powerful role in public finance. By the early 1720s, the company devised another audacious financial scheme. It proposed to take over nearly all of Britain's national debt, then worth £31 million or £6 billion today, converting government bonds into company shares. This was sold to the public with grand promises of untold wealth from future trade. The British government, eager to reduce their debt burden, endorsed the scheme. With the backing of the government, the bonds, known as gilts, were retired, and their owners were compensated with a commensurate number of shares in the South Sea Company. This machination massively increased the number of shares and shareholders of the company, and overnight turned it into the most traded company on the planet. As with all manias throughout time, it started innocently enough. People, convinced by the prospects of the company in the South American markets, and assured by its closeness to the British government, started to buy shares as safe long-term investments. The shares, which were trading for around £105 throughout most of 1719, started to rise. This started out innocently enough, with the price increasing to £128 in January 1720. But people quickly started to get giddy. The price hit £175 in February, £330 in March, and £550 in May. It was in the summer of 1720 that the temperature really started to rise. By July, the shares peaked at £1,050, an increase of 10 times in less than a year. This share price meant the company, with 200,000 shares outstanding, was now worth £210 million, the equivalent of £38 billion or $51 billion today, making it the most valuable company in the world. But what about Isaac? Newton began buying shares of the South Sea Company in early 1720, at an average price of £125 per share, accumulating 50 shares for a total investment of £6,250 or £1.1 million today. And as the shares began their astronomic rise, Newton kept his head. He relatively quickly sold his entire holding in the spring for £14,000, generating him an astounding profit of £7,750, the equivalent of £1.4 million or $1.9 million today. Newton, satisfied with his profit, put his money safely in the bank and watched from the sidelines. But what he saw disturbed him. His friends, colleagues, and contemporaries were still speculating in the stock, and they were getting rich, filthy, stinking rich. Increasingly perturbed about missing out on the gold rush, Newton lost his mind and panic bought shares, even as they passed the £500 mark. He was now only able to buy 35 shares at an average price of £550, for a total cost of £19,250, a significant chunk of his net worth, equivalent to PS 3.5 million today. Newton was initially satisfied with his decision to re-enter the market when the price spiked to £1,000, giving him a paper profit of almost £16,000, or £2.9 million today. However, as with all speculative periods, the get-rich-quick hucksters came out of the woodwork, sucking up capital in new enterprises which promised to deliver even greater returns than the South Sea Company. With less capital available and with doubts starting to grow in the minds of the more restrained investors, who withdrew from the markets, further reducing the capital required to keep the bubble inflated, the inevitable happened. After peaking at £1,050 per share in July 1720, the shares began to ebb. But Diamond Hands Newton decided to hold on, believing it to be a temporary lull. This was his second mistake. As more and more investors panicked and tried to sell, and with no buyers to be found, the share price collapsed to £180 in September and £120 by December. And by 1722, the shares were as low as £75. Newton finally sold out for a loss of £16,500, the equivalent of £3 million today. The smartest man in the world, the man who discovered gravity and invented of calculus, had managed to turn a profit of £1.4 million into a loss of £3 million, a spectacular additive inverse. As a precursor to Joe Exotic, Newton was financially ruined, and even though he avoided bankruptcy due to his income as master of the mint, he never managed to financially recover from his losses on the South Sea Company. Newton was, however, able to philosophically note, "I can calculate the motions of the heavenly bodies, but not the madness of people." He spent the rest of his life working at the Royal Mint and trying to rebuild his fortune. When he died in 1727, his estate was worth approximately £30,000, the equivalent of £5.3 million today, which demonstrates he did manage to recover some of his losses. As a cautionary note, upon the death of Sir Isaac Newton, King George II decided to have him buried at Westminster Abbey, so that future generations may be reminded of the dangers of speculating in the stock market. Anyway, that's all for today, but I hope you'll join me next time. Thank you for watching.